ever-changing world. Wizards of the street at these times. This is TV18 and you're watching CNBC-TV18.
Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. After a historic year of highs in 2021, stability is the mantra for Indian startups in 2022. The funding winter is well and fully here, sending chills down the spines of founders, most of whom have never experienced an economic down cycle before. Now, after a furious period of raising funds, expanding teams and burning cash to drive growth, it seems the hard ground is rising to meet them. Look at even the largest tech companies in the world, from Meta to Amazon, Microsoft and Twitter to startups like Snap and Stripe. Over 73,000 employees have been fired by the darlings of the internet era. The storm hasn't left India untouched. More than 17,000 layoffs this year, even at the most valued, most funded new age companies, from Ola to Byju's, Unacademy, Vedantu, Blinkit, Chargebee. The list is getting longer. Adding to the pressure on recently listed startups like Nykaa, Delivery, PB Fintech and Paytm that are seeing big investors sell stakes as the lock-in period expires. Reducing cash burn, taking the path to profitability, turning around unit economics, downsizing to extend the capital runway. These are now the phrases of a painful period that could stretch beyond the turn of 2022. Surviving, not thriving, should be the top of mind of founders. That's the cautionary word coming in from entrepreneur Kunal Bahl, who in an opinion piece also says there is no shame in cutting down scale. Profit will be the only true friend that shall bring mental peace, says Bahl. An experienced founder and a prolific early-stage investor, Bahl has seen his own share of trials, from boardroom battles to layoffs to pivoting to a profitable path, one that would lead to entrepreneurial peace of mind. He's been there and done that. So joining me now with the warm blanket for India's young entrepreneurs is Kunal Bahl, the co-founder of Snapdeal and Titan Capital. Kunal, many thanks for joining me here on this edition of Young Turks. It's good to have you back on the show. You know, as I was reading out this introduction to set the context of where things currently stand for the startup ecosystem in India, globally, as well as your own story, Kunal, you know, this is not your first trip down this road. This is not your first rodeo. Unlike many of the current crop of founders who are experiencing their first downturn, you've been through this cycle. Is there a sense of deja vu? Do you understand the nervousness, the fear that some of these founders are probably experiencing for the first time?
Thanks for having me. First and foremost, Shireen, it's always a pleasure to be on Young Turks. I think I may have completed a decade on the show as well by now. You know, I first want to start by saying that the India startup story is absolutely intact. I think the potential that we see in this industry, in this sector over the next 10 years, I don't think there is any doubt in anyone's mind that this is going to be a really, really strong arc of progress and growth. However, as you rightly said, we are going through yet one more cycle of, they've gone through a frothy cycle of funding and growth and relentless hiring. Now we are going through a process of rationalization. And you rightly said, it's not the first time it's happened. I think in my journey of entrepreneurship of 15 years, this is probably about the third time I'm seeing it. If there is one certainty, if there was one certainty, which is this rationalization period was going to come, and if there is another certainty, it is that this rationalization period will end and we'll be back to the growth trajectory again. However, this is a time to hunker down for founders as well as investors who are guiding and mentoring and sitting on the boards of many of these companies. It is time to start going into mission mode in cutting operational costs and finding those islands of profitability in the company and growing those. And for founders who have not gone through the bit of a grind in the past that some of the others who've been around for a while have, they may not feel confident to start going into this mission mode of cutting costs, but you need to start feeling confident. And I'm sure that with all the guidance that is being given out by investors and fellow founders alike, we're going to see far more rationalization going forward.
Yeah, interesting things that you said there, Kunal. Of course, as you pointed out, this is your third time, so you've done this rodeo before. And of course, the tough times will end, and hopefully we will start to see another growth cycle. And of course, as you point out, in the long term, the India startup story is intact. But let's talk about the near term, Kunal. You're not just an entrepreneur, but you're also today funding businesses as part of Titan Capital. Some of the companies in your portfolio include the likes of DealShare, Mamaearth, Off Business, Ola, Razorpay, Snapdeal, Urban Company. Now, each one of these is going through a different sort of trajectory in terms of growth, as well as the road to profitability, where things currently stand on unit economics. So it cannot be a one-size-fit-all mission mode template for each of these companies. In your conversations with founders, what are the priorities that you're asking them to focus on at this point in time?
Yeah, so I think when founders are speaking with me, it's always usually what is the trade-off to make between growth and profitability. First and foremost, I can say that no founder believes that they never want to be profitable. I think from the day a founder starts his business, his or her business, to perpetuity, the fact that they want to become profitable is part of their psyche. They think about it almost every day. They may be very far from it, or they may be close to it, but they do think about it. So I think we have to first and foremost give credit to the founders that founders in the world of tech and startups are not completely oblivious to the concept of profitability. They are fairly mature and well aware that this is eventually where the business has to go to. That said, Shireen, you rightly said every business's situation and circumstances are quite different. Some companies are actually already profitable. And so what they are doing right now is focusing on growth, because many of the other market players around them may be cutting back on growth investments, given they need to extend their runway and shorten the ride to the edge of the cliff. However, there are many companies currently, I would argue the majority in the ecosystem, who are still not profitable. And for them, they have to do many things. Right? They have to make sure that first and foremost, they identify the islands of negative unit economics in the business, where the more that part of the business grows, the more the loss grows. Essentially just sunset those parts of the business overnight. They also need to cut down the investments they're making in projects that were extremely forward-looking, where the profitability out of those projects was not in sight. There is a lot of talk around layoffs, etc., as you mentioned. I always tell founders that that should be the absolute last resort, because the lives of your employees, their families are at stake. Yeah. And if there are many things that you can do through operational intervention, by talking to your vendors, talking to your partners, by introspecting on what parts of the business to grow versus what parts of the business to sunset, you may be able to actually avoid doing any layoffs as well. And only if it is unavoidable should you go down that path.
I want to pick up on that issue, Kunal, because we are starting to see this globally and here in India as well. Last count, about 17,000 people in India have been laid off, a large number, of course, from the edtech space. You said that should be something that founders should resort to at the very end, and only if it's unavoidable. But given the experience that you've had, and also based on the conversations that you are having with your own portfolio companies, how much more pain do you anticipate we could see as far as this space is concerned, in terms of just having to lay off people? Are we really only at the start at this point in time? And what is there's no good way of doing it, but what should be kept in mind as companies take this difficult decision to lay people off? I know you believe that it should be done at one go. There should be transparency. There should be thought given to hand-holding people who have lost their jobs. But, in your experience, what should be the approach taken if you do have to come to that pass?
So first and foremost, I think, Shireen, it's very important to align the entire team, the board, the shareholders of the company, all the key stakeholders of the company, as to what the strategy is of the business, where we are, where we need to get to, and how we'll get there. Along that journey, if one realizes that only through operational interventions we are not going to be able to get to where we set out to, and we don't have money to continue the company, and at which point in time one does have to reduce the cost structure of the business. The founders have to realize that this is the moment where their generosity, their empathy needs to be paramount. They should not view this situation as purely transactional. Hey, I need to cut this much cost. These many people have to go as a result. It's important to engage in direct conversations with the impacted team members. It's important to figure out a way where they can be placed in some other companies that their friends run, or companies that have been invested by some of their investors. The responsibility of the employer doesn't necessarily end when the termination and the severance payment has been completed. In some ways, the responsibility starts to ensure that the impacted employees are actually placed in a place where they can continue earning their wages and supporting their families. But it is tough, Shireen. It's not easy. Any founder who has ever gone through this phase and has had to do this has carried battle scars for life, and the only thing you could do is do it generously, graciously, respectfully, so that all those who are impacted can continue with their professional journeys just in another company.
Yeah, I would imagine this is one of the hardest decisions that an entrepreneur is forced to take, and I hope that we don't see large-scale layoffs within the Indian startup ecosystem, but we must prepare and brace ourselves for that eventuality given the funding winter. But Kunal, what I want to understand from you at this point in time in terms of confidence, and as you said that in the long term the story is intact, but if one were to take a look at the experience of what is happening with the new age listed companies and the manner in which we're seeing block deal after block deal as soon as the lock-in period has lifted, that's putting a question mark on the story itself, and that does shake confidence of other investors. That does shake confidence of retail investors further, doesn't it?
So, Shireen, I'm really not an expert in public markets. All I know is how to build businesses and how to, in some ways, support early stage founders in their own entrepreneurial journeys. And I think I would say the same way on the way up of valuations, I used to say that we should not conflate value and valuation. I would say as valuations are getting corrected now, we should again not try and conflate the concepts of value and valuations, because valuations are usually at a point in time. They're usually impacted by multiple factors, which are many times even external to the company and its inherent performance. I think fundamentally these companies that have listed are all strong consumer franchises in many cases. They have millions and millions or hundreds of millions of customers whose lives they touch every day. Many of their customers can't live without these services. So there is a lot of value that these businesses actually carry and have built and have been great inspiration for a whole generation of startup founders. So during these tough times, while I understand that there is an element of potentially despondent investors, and again, I'm no expert in the realm of public stock markets, but I do feel that all these companies have built enduring value in their businesses, and over time, the valuation will probably match up to that.
Time for us to head into a break, but when we return, we continue our chat with Snapdeal's Kunal Bahl on riding out the downturn. Welcome back. You're watching Young Turks. We're in conversation with Snapdeal's Kunal Bahl on riding out the downturn. Kunal, let's address the other issue that founders are going to be faced with at this point in time. And one, of course, is just being able to go out there and raise capital. The other is to conserve whatever capital you do have, because, there's probably limited runway for raising capital at this point in time. Now, as you speak to the portfolio companies that you are currently engaged with, where are they finding the biggest challenge? I'll ask you this in the context of the assumptions that were made through the COVID period, especially for digital businesses, where everyone thought that, look, we're never going to go back to pre-COVID times, and so the growth assumptions were significantly higher. Mark Zuckerberg coming out and acknowledging that and saying that that's really now responsible for the kind of cutbacks that they are faced with. how much of that are we seeing or starting to see play out here? The assumptions made about the kind of growth that founders believe was possible, and now the normalization that seems to be taking place.
Yeah, I think first and foremost, Shireen, when I talk to founders, I tell them, and I tell myself also the same thing, which is assume no funding is coming into the company and take all your decisions basis that. If somewhere along the road, some investor finds you attractive as a business or the market changes, let that be a big surprise, big positive surprise. But assume no new funding is coming into the business, and then how would you decide on the various aspects of the business based on that? This isn't the time for irrational optimization of optimism, especially if the meter is running fast on the cash burn of the business. And fundraisers may have given founders pleasure in the last few years, but building a profitable business is what will really give happiness. Given then you're completely, you have relinquished all need of other investors coming and backing you in your time of need. Now, going forward, it is going to be very clear that founders are going to realize that the astronomical growth rates that we were seeing over the last few years are actually quite unsustainable. And they can only be possible if you are willing to essentially inject the business with steroids to drive astronomical growth. Public markets, as you know, would see even 25, 30, 35% growth rates as quite solid growth rates, quite significant growth rates. There is a big mismatch between what growth rates private market investors think is suitable or appropriate versus what public market investors think is suitable. The only difference is public market investors want that lower growth rate with profit, but private market investors are okay with these very high growth rates, triple-digit growth rates, 300%, 400% growth rates, and they're okay for companies to lose money. Now, for a short period of time, that is okay to do because the companies are small, it's of a small base, there are some fixed costs, but very quickly, it's important for companies and founders to start calibrating their growth rates, not give in to the high growth trap at high cash burns, because then rolling that back over a period of time requires companies to make very, very tough decisions, as we are seeing now.
Yes, and this driving growth on the back of steroids is never a good idea because steroids are harmful in the long term. They may give you a boost in the short term, but they will have a debilitating impact in the long term. But Kunal, I want to understand from you, given the scenario, and you just said that assume that there's no funding coming, what are you doing differently? Is there a next pivot at Snapdeal given the current environment? I know that you have been able to narrow down losses, but it's losses nevertheless. So what's the story at Snapdeal? How are you going about dealing with this downturn?
I think we're doing fine. Thanks for asking, Shireen. But I think we're doing fine. I think we've been a fairly prudent company in the last few years, kept our fixed costs low. We have been investing in growth, but we've been doing that in a relatively prudent fashion. Also, we're patient now. I think one of the biggest, the biggest enemy of profitability is actually impatience. Is sort of been my biggest learning. That if you're willing to be patient, if you feel you have built some value that customers like whatever your proposition is, your customers like, whether they're businesses or consumers, and you operate in a large space that can support multiple players, then the most important virtue that a founder has to demonstrate is patience. Also the investors, I would say.
Yeah.
Because if you're patient, then you may not grow at astronomical rates. There may be years you may have to cut back your scale also to ensure that you can live another day. But if you are patient, then over a period of time, it will work out. India is a fantastic market. You look at we're going to be third largest economy. It's a certainty within the next 6 to 7 years. Digitization is abound in our country. Talent pool is abound. Consumers are spending more. We are living in the biggest macro bright spot on the face of the planet. At this point, the most important thing for founders is just keep their head in the game so that, when the market opens up again, they are there to benefit from it.
Yeah, keep the head in the game, and plenty of patience and perseverance as well, and no time for egos. That clearly has to be the message that founders take away. But Kunal, as an investor, what's the story? Are you investing at this point in time? Are you holding back? What's the plan?
Yeah, I think, Shireen, my philosophy, at least on the investment side, has always been consistency, where, in investing for more than 11 years now, I think starting with Ola in 2011 and many companies, over 250 companies over the last 11 years. And I've seen that the key is to invest across cycles. You don't want to become too prolific during frothy cycles, and that's also a lesson we've learned. And you don't want to just completely shut shop during slightly troubling times, because great companies are built in all cycles, up cycles and down cycles as well. Key is to not lower the bar on the type of founders and the companies and the ideas and the markets you are backing, and just be consistent. Like, it's important to build enduring value through investments. One has to be just absolutely disciplined and absolutely consistent year after year after year. So the simple answer to your question is, we continue to invest even this year, and we are super excited about all the companies we've been investing in. And we feel that they will be the future leaders in their respective spaces in the next few years.
I want to ask you a somewhat personal question now, Kunal. When you get used to headlines celebrating you, recognizing achievements, recognizing fundraising, and so on and so forth as a big milestone, and then suddenly, there's only bad news and talk about layoffs, talk about cuts as far as valuation is concerned, it does have an emotional and psychological impact. As a founder who's gone through a near-death experience in the startup way, what was your mechanism of coping with that personally? What would you like to share with other founders?
It's probably the most important question, Shireen, that you've asked me today. I do feel that the burden of expectations on founders are immense. They get a hard time from all places. They get a hard time sometimes when things are not going well, from investors, board members, employees, sometimes co-founders, and also media and the world at large. It can get very, very, very lonely in these times. But Shireen, for me, I've always reminded myself that whenever I'm at the bottom of an abyss, just having that little bit of courage, just mustering that little bit of courage to continue, and coming out of that trough, you realize that it's a whole new world and things are always, always better.
But who did you turn to, Kunal? Did you speak with someone? Did you actively reach out to someone? Just a shoulder as a sounding board, because as you pointed out, it is anyway a lonely journey, but during the down cycles, it gets a lot more lonelier. So what was the mechanism to cope with this?
I think having people have different ways. Sometimes your co-founder actually will be your biggest supporter, because there may be low days that you are feeling, there may be low days that your co-founder is feeling. As long as both of you are not feeling the low days at the same time, you can be a great mechanism for supporting each other. Family plays a very big role, Shireen, during tough times. At the end of the day, our families just want us to be happy and lead, positive and peaceful lives. While they want us to be successful in our pursuits, our happiness and our peace of mind is always paramount. So staying close to one's family during tough times has really helped. And just waking up every day and putting one foot ahead of the other, and not trying to look too much in the rearview mirror about what could have happened, what should have happened, what could have done differently. I think that's really not productive during tough times. The key is to just keep moving forward without worrying too much about what has happened in the past. You can't really do anything about it anyways.
Absolutely. The present is what you have. Take one step at a time. And, given the volatile times that we live in, there's no point obsessing with the future either. You just have to get through the day ahead. Kunal Bahl, it's always a pleasure. We really appreciate you joining us here to take us through, your own story, but at the same time offer from your experiences what founders should focus on at this point in time to ride out this downturn. Always a pleasure. Thanks very much for your time. That's it then on this edition of Young Turks. Thanks very much for watching. Do stay tuned. We will continue here on CNBC TV 18.